Coming up on Market to Market, heavy snow and rain bring major drought relief in the West. Plus, the confirmation parade begins on Capitol Hill. And retaining value takes root in a forest of competition. Those stories and market analysis with Brian Roach next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, January 13 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Many of you have finally retired your Christmas trees to the attic or burn pile, and the gifts you put under the ornamental evergreen helped steer the economy. Retail sales rose 0.6% in December, mostly driven by higher automobile sales and online shopping. Much of the inspiration to pull out the wallet came from post-election confidence and better paychecks. The Producer Price Index increased 0.3% in December as more expensive gas, food, and cars led the way. The PPI measures price changes before they reach consumers. The U.S. dollar again retreated this week, hitting a one-month low as the greenback lost traction amidst political uncertainty. Travelers trying to get around the major storms aren't able to take refuge in lower fuel prices. The AAA reported this week's national average is the highest since June of 2016. Last summer was right in the middle of the 20th consecutive year for above-average temperatures. While the mercury has yet to set records in 2017, the copious amounts of water falling from the sky could. John Torpy has our weather report.
States in the West received both good and bad news this week as torrential storms pounded a good portion of the Pacific Northwest. In California, the northern two-thirds of the Golden State acquired much-needed moisture, making a significant dent in the state's 5-year-old drought by 20% in just 1 week. According to the latest drought monitor, much of the West experienced relief in the form of heavy rain and snow from Utah to Colorado. But in parts of Northern California and Nevada, all the drought-busting rains are proving to be too much of a good thing. Torrents of rain roared down the streets of Hollister, California, forcing overnight evacuations in the small agricultural community. Heavy snowfall blanketed the Rocky Mountains, causing avalanches that toppled trees and left 15 feet of snow on some interstates. Floodwaters from the Truckee River advanced on Sparks, Nevada, pushing a foot of water into the city's industrial area. The tumultuous weather pattern is continuing a 2016 trend. Last year was one of the warmest years on record for the country. According to the National Oceanic and Atmospheric Administration, 2016 was the second hottest in the 122 years of record-keeping. The U.S. set a high score for the number of weather disasters in 1 year. 15 separate severe weather events in 2016 caused $46 billion in damages between flooding, wildfires, and tornadoes.
Get a little closer, what do you think? Get a little closer!
For Market to Market, I'm John Torpy.
While Barack Obama and his administration are packing boxes for a move out, those seeking jobs in the Donald Trump leadership team are being put through the congressional ringer. Confirmation hearings began while the new Congress set course on their agenda. Tom Vilsack, the longest-serving member of Obama's cabinet, left USDA Friday, and his replacement has yet to be named. Peter Tubbs brings us up to speed.
Thank you, Senator Peter.
The hearing process for President-elect Trump's first cabinet began this week. Elaine Chao, the nominee for Transportation Secretary, is a veteran of the job. She held the same position for President George H.W. Bush during the 1990s and was Secretary of Labor for President George W. Bush's entire presidency. Chao is a proponent of using private financing to fund America's growing list of infrastructure projects. In her hearing, Chow discussed regulating the use of drones for both personal and business use.
You know, the drone started out as you mentioned, for the Department of Defense. It's an emerging technology. There are those who see the benefits of commercializing them for various uses. It's transforming the way we work, the way we do commerce. There are also others who are very concerned about privacy issues, security issues. And again, for going forward with an emerging technology as important as this, with such vast implications for our future, I think we need to talk about it. We need to have, again, a national consensus on where we're going.
Trump's nominee for Secretary of State, Rex Tillerson, a former CEO of ExxonMobil, may be closer to post-Cold War relations with Russia than the vision presented on the campaign trail by Trump. Tillerson also sees threats from China and radical Islam.
China has emerged as an economic power in global trade, and our interactions have been both friendly and adversarial. While Russia seeks respect and relevance on the global stage, its recent activities have disregarded America's interest. Radical Islam is not a new ideology, but it is hateful, deadly, and an illegitimate expression of the Islamic faith.
Only one cabinet post still lacks a nominee: Secretary of Agriculture. The man currently holding the job, Secretary Tom Vilsack, told the Wall Street Journal that the absence of a nominee so late in the cabinet selection process reflects a lack of appreciation for what the department does. Senator Charles Grassley of Iowa, who has chastised the Trump transition for delay on the agriculture nominee, downplayed the importance of the job in the short term.
If we had to have a farm bill within a couple months, I'd say it's something to worry about. But the initial stages of working on a farm bill are going to be done by the committees of agriculture of the House and Senate, and we don't need input from the president right away or his cabinet right away on that point.
For Market to Market, I'm Peter Tubbs.
This week, China's Ministry of Commerce announced that U.S. distillers' dried grains will face a more than 50% tariff. This comes just days after China increased the ethanol tax from 5% to 30%. The new administration has vowed to get tough with trading partners like China. Trade has taken a seat on the bus of concerns for some in rural America as companies need new markets to stay profitable. Delaney Howell reports how one organization has turned to innovation to be competitive both here and abroad.
Better known for its production in cotton, catfish, and sweet potatoes, Mississippi is one of the leading producers in another agricultural industry: forests. Across Mississippi, some 350,000 private landowners control approximately 75% of all forest area in this state, which contributed $1.16 billion to the state's economy in 2015. A majority of these private owners sell their wood to companies like Weyerhaeuser. Controlling more than 26 million acres of forest land around the world, the company thins the timber to retain high-value trees for use as dimensional lumber and plywood. The remaining majority of the smaller, lower-value trees are used to make pulp and paper products. However, over the past 2 decades, a decline in print and paper use has taken its toll on the forest industry.
We've seen a decline in the southern United States in the pulp and paper industry in the last few years. And as those mills have gone out, we've lost some markets that we really need to be able to keep our forests growing at a sustainable level.
5 southern states, including Georgia, Alabama, Mississippi, Louisiana, and South Carolina, produce over 50% of the nation's wood used for pulp and paper production. Scurrying to find a new industry to sell lower-grade timber, and to ensure that forests would be preserved, the pellet industry took root.
So that's what the pellet mills have allowed for us. As they've come in, they've helped us create some new markets for that pulpwood, and that's why we're thinning this stand right now, and we're able to take it to a pellet facility.
One company has helped ensure that these lower-grade wood thinnings have had a marketplace since the decline in consumption of pulp and paper. Drax Group plc was originally built in the United Kingdom to provide energy via coal, but soon found that was not the answer.
Our facility in the UK was built in about the 1970s, and it was built as a coal-burning power station. Well, it's become increasingly apparent that burning coal is not good for the climate. And the UK government have recognised this, society has recognised that, and the UK government is increasingly trying to withdraw from the burning of fossil fuels and coal. And our company has responded by replacing coal with compressed wood pellets.
Needing a steady supply, Drax Group plc decided to seek out sources in the United States. In August of 2011, Drax Biomass opened its domestic headquarters, initially in Boston, Massachusetts, before relocating to Atlanta, Georgia in 2014. Extensive testing was done prior to selecting wood pellets as a fuel source. But efficient burn rates combined with low carbon emissions made the product an easy choice for the company.
So rather than using a fossil fuel where there's additional carbon being pumped into the air, by using a renewable fuel such as compressed wood pellets, we can stop that. And in fact, we show that when we calculate all of the savings associated with our activity, we do use some fossil fuels, of course, in the harvesting of the tree and the transportation, even in some instances in the growing of the crop. We take all of that into account. When all that is taken into account at the power station, we make savings in excess of 80% in terms of carbon emissions compared to coal.
Following the decision to utilize pellets, 2 processing facilities went up in the fall of 2015. The Amite facility located in Gloucester, Mississippi, and the Morehouse facility located in rural northeastern Louisiana.
So the reason we produce pellets is for shipping efficiency. Ideally, you can get more into a hold, into a cargo container, into a van on a truck. All that you can get more tonnage through. It's more cost effective, it's more fuel efficient, it lowers the carbon footprint by having more density in the material that you're shipping. So for us, that's why we do the pellets, because the pellets have a higher density than say a natural wood does, or even chips or sawdust or anything like that.
After the pelletizing process, the materials are sent by rail or truck to an export facility in Baton Rouge, Louisiana, where up to 2 million metric tons of pellets can be exported annually. Along with the environmental benefits, the communities near the 2 facilities have seen major returns to their local economies.
Locally, obviously, it brings in 60 direct jobs here at the facility. Usually we say that's a 3 times multiplier, so about 175 jobs, indirect jobs in the area. And then construction even more so because of all the construction personnel that were on site, close to 300 at one time during the construction process. So, it's definitely a shot in the arm to the community that we're in by operating here.
Since transitioning to pellets, the UK power plant now provides approximately 8% of the country's electric needs. Although the amount of power generated by burning wood pellets in the US is relatively low, Black is optimistic about what the technology has to offer.
I think the domestic side is going to grow. It's up and coming. Obviously in Europe, they're well established, and it's been something that they've done successfully for many years. I do believe that domestically here in the United States, we're going to see that market grow in the coming years.
For Market to Market, I'm Delaney Howell.
Next, the Market to Market report.
This week's USDA report set the market in motion on Thursday as the government said the second fewest acres of hard red wheat were planted since 1909. For the week, March wheat improved 3 cents and the nearby corn contract was unchanged. The USDA report boosted the soy complex by nearly 30 cents on Thursday. For the week, the March contract jumped 52 cents. March meal shot up 7% or $22.60 per ton. In the softs, March cotton lowered $1.72 per hundredweight. Over in the dairy parlor, February Class 3 milk futures declined 36 cents. A reversal in the livestock sector as the February cattle contract gained $3.71. March feeders jumped $5.50, and the February lean hog contract rose $1.62. In the currency markets, the U.S. dollar index dropped over 1,000 points to close 1% lower. Crude oil fell $1.62 per barrel. Gold gained buyers again, rising $22.80 per ounce. And the Goldman Sachs Commodity Index declined 2 points to finish the week at $399.80. Here now to lend us his insight on these and other trends is one of our regular market analysts, Brian Roach. Brian, welcome back.
Thanks, Mike.
Before we get started, you can listen to our market discussion anytime by downloading our market analysis podcast on our website, iptv.org/MTOM. Brian, we want to kick this thing off taking a look at that big break in the dollar this week. What precipitated that?
Well, I think the market had traded largely a big move in equities supported by a transition in Washington, D.C. that had a lot of upside built into it, and the market largely had already traded that 2 or 3 weeks ago. Now we're seeing this break. Treasuries are also backing off, and if anything, it's probably a buying opportunity on this correction. If CEOs, large corporate buyers of high-quality debt are wanting to get in and use that money to invest in infrastructure and plant equipment, technology, etc. I think it's just a pause here, more of a break than anything.
Before we start to move higher yet again?
I would think so. I mean, I think the dollar amongst the ag commodity currencies will be, it'll be stronger. The Fed's given indications that there's more and more traction here. We saw wages tick up. So I think they're building a case for a more normalized interest rate environment,
okay.
And I think that's what we should probably plan on.
All right. Well, this break in the dollar was certainly viewed as somewhat beneficial for the wheat market. And let's talk Chicago wheat right off the top. We traded up a little bit. We're up again. We're still putting in some highs for at least the recent history. Can we find some more steam?
I don't know how much traction you're going to find in the wheat markets. I mean, obviously the premium spring and hard red are the market leaders here. Chicago is going to be a trailer for a little while. I mean, if you look at stocks to use ratios, they're just upwards of 60%. These are still what I would call burdensome. So we've been triggered. We've triggered some sell signals here in the last week. They're getting a little longer as we move to the end of this week here, using this peak in wheat rallies to sell for cash flow only. Really think there's better opportunities to sell wheat ahead.
Okay. Now we do have a question from one of our viewers. As you mentioned that hard red and the Minneapolis contracts, Marty in North Dakota has a question for us. Marty wants to know, he says, you wanted a question, and you bet we do, Marty. We always want questions. He says, can we quit talking about how bearish winter wheat is and talk about spring wheat? Address spring wheat point blank, please. So that high protein, that content wheat has really found some demand. Do you expect that to continue?
I think it's been the market leader in all three classes of wheat. It traded up against 200-day moving average resistance and couldn't really get itself away from there until recently. And so as supplies begin to dwindle, I think the premium, we're not far. I think we're 15 cents away from $6. We probably trade $6 on that market. But we've been slowly selling for cash flow, metering it out, keeping sales small. There's still probably better sales to make ahead here. But I think on this pop from yesterday into today, we reward that rally with some small sales again, and then sit back and wait.
All right. Well, let's talk about this corn market. We had a broadly favorable report come out on Thursday from the USDA. Talk us through that report's impact on both the old crop and the new crop wheat market, or corn markets.
The good news from this report is that it wasn't terribly bearish. So we had a small decrease in production. And ethanol demand up 25 million bushels, but feed demand down 50, and I don't think that's really any surprise. But the real question, I did several meetings here this week in up northwest Iowa, and the question is what to do with old crop. And so we had a sell signal here earlier this week that was, say, 15 cents off the recent bottom. The prior sell signal before that, say 20 cents off the bottom. And I think these rallies for growers who need to generate cash flow and keep the grain moving, that's a good strategy for that. And I think that's probably how you're going to have to walk all the way into the summer, where the better opportunities are probably still ahead. So
weather-related opportunities, most likely.
Typical, where the funds get involved and there's a lot more traction. So I look for that to be the challenge for growers to move this old crop. And you're going to want to look at basis moves, ethanol at record levels, liquid ethanol and inventories not keeping up. So you look at ethanol, and I'm seeing 10-cent moves and probably something better than that not posted. And so growers who are close to that ought to look at selling strong basis, and if they're if they're ready for it, they can come back and buy the July futures on a buy signal or on a break. And so I think you want to continue to do that on the old crop and not park it all into the mid part of the year to take advantage of something that may or may not come. But I think corn, especially on the new crop, has a lot of potential.
Okay, and that leads us right into another question we have from one of our Twitter followers. This one's from Nathan in Iowa at Neuendorp_N. He's saying, considering the strength in beans off the report, and we'll get to that in just a second, will corn move to buy acres yet this spring as you look at that December contract, or are beans more likely to soften?
That's a good question. Right now the beans have a premium over corn, at like 2.7, 2.6. And I think that will probably stay that way until we get closer to looking at the weather. Right now, beans look like they're favored over corn and maybe over cotton in some areas, and certainly they're getting some interest from wheat areas. And with this report yesterday being light on wheat acres, you can see where it's easy to come up with some extra bean acres. So I think we probably look at that ratio coming closer together with corn coming up and beans probably coming down. But we've got a not so perfect scenario in Argentina right now, and that could continue to give us some legs in the bean market. So I don't know that anybody's going to have the right answer for that. Mm-hmm. The answer that somebody wants to hear is probably, we'll just have to see how this plays out.
So at this point, are you advising growers to make sales on new crop soybeans if they're expanding acres, or do we just sit tight?
We sold a good increment at the tail end of last year, where the indicators were all very strong for us to make those sales on old and a piece of November 17 soybeans, and I've been itching to sell a little bit more. The catalyst out of yesterday's report, I think, is going to give us that opportunity on into the front part of this week, although we have a 3-day weekend, so that could upset that if the weather does get more ideal. Okay. But I think it looks good to sell some beans here the front part of next week.
Okay. Even though Brazil still looks like they're going to be growing a massive crop, you're still excited about the perspective for beans going forward.
I think that we've been waiting to get another increment of beans sold. Okay. We're going to get it next week, and we're going to want to sell some old and some new crop because of the scenario on acres and a decent yield. The potential for low prices in the fall is something that I want to have a fair amount marketed before we get to the U.S. growing season. I don't want the U.S. growing season to be my whole marketing plan.
Gotcha. Dependent on a weather event. Correct. Up here.
Right.
Certainly.
Right.
Well, let's take a look at these livestock markets. Live cattle turned around. It looked like we were going to start moving lower at the end of last week, and we took off like a rocket ship. Went limit up this week. Brian, what happened?
Well, I think you could probably look to the index funds for some of that long-sided buying that we saw. But if you look at beef and even pork, I mean, the export markets have been very strong, even up against the strong dollar, and they've had a lot to do, I think, with this steady higher price for 3 months. And so we've had a pretty strong move here. I'm not really ready to be selling cattle unless we're on some rallies here. Cash cattle traded, say, 117, 118 this week, so still decent. And if you look at the World Outlook Executive Board, they raised the high end of beef prices $6, $3 in the hogs. And so I think you want to get closer to the top side of those ranges before you start to take any risk off the table.
When you're taking risk off the table, we hit those high side of the ranges. Do you want to do it for an extended period of time, or are you comfortable just selling hand to mouth as you look out for the future of your operation?
I'd say, first and second quarter, not much further.
All right. Feeder cattle, another strong bounce there, even with the strength we saw in that corn after the report. Still have some upside on that market?
Yeah, I think, we talked about the range on those before, high 130s, low 140s.
Okay. But
there's some room to grow here. I like the livestock where we are today. Hogs probably being the weaker component to the livestock, but certainly, feeder cattle guys are finally seeing some profits, maybe $50 a head in December, maybe $100 a head in January. So there's some positives there for, first time in a couple years?
Yeah. Yeah, coming up on 2 years now for the cattle feeders.
Right, so I think there's still some upside, but again, sell the strength. I wouldn't be selling weakness in feeders or in the lives. I would be selling the strength.
Okay. Now, you mentioned that the lean hog market is the one that has you a little skittish here today. What is it about that market that has you nervous?
Well, it's also been on a pretty solid trend higher. It looks more exhaustive, and with futures where they are trading, say, 5, $4, $5, $6 above the index, that's typically a wider spread than what would be normal, and that would tell me we probably have a correction coming. It might just be a correction, and that's all it is. But if I were selling something, I'd probably be selling the February contract.
Okay, you wouldn't be looking to lock in too much beyond that. You still think there's some sunshine up ahead.
No, unless a producer has some packing contracts that make a lot of sense for taking risk off the table on big animal numbers. That's about the only thing I'd be looking at.
All right, Brian, and I did not get a chance earlier to ask you about your thoughts on the cotton market. We pulled back a little bit this week. We've been fairly volatile over the past couple weeks. Do we have some strength coming back in?
Well, they're going to have to fight for acres, I think, as well. If you look at the weekly chart in cotton, it's still a pretty solid trend higher. I think that cotton acres will probably increase this year, and so you have to be, as a cotton producer, and looking at how you can maybe take some risk off the table. But the net long in cotton is kind of wound up already, and we've probably already traded that number. So we could see some downside, but I think they're going to have to hold some value against beans as we head on into springtime.
Maintain that acreage as beans look like the sweetheart.
I think so.
Well, Brian Roach, thank you so much for taking the time to join us this week.
Thanks, Mike.
That wraps up the broadcast portion of Market to Market. But Brian and I will keep the market conversation going, including answering more of your questions during Market Plus, which you can find on our website. And while you're there, check out this week's M2M podcast as we talk about how base hits can sometimes be better than home runs in the commodity markets. And join us again next week on the broadcast when we'll look at bridging the gap between rural and urban America via the tourist trail. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.